It was a monster day in the market. For those of you who encourage prices to fall and love it, this is the day you've been waiting for. Guys, I've been preaching about this for a few years now, and I've looked like a fool. I get that. But the market can stay irrational longer than I can stay solvent. I've been patient, and from the beginning of the year till now, the markets have gone down, and it's forming the perfect pattern. I'm starting to see the major overhyped stocks down 60, 70, 80%. I'm starting to see the other YouTube guys out there who picked one stock that went up a ton and think they're geniuses now starting to look with egg on their face, okay? This is part of the process. We need the average everyday guys like those YouTubers out there being wrong, and they're proven to be wrong now, okay? The stocks are falling 70, 80%, and it's showing that they don't have the clout. Guys, go look back over the last 6 months. Go look at all the major companies. Look at Nike. Nike is a major company that I love, and they're down 34% in the last 6 months. Now, I don't think Nike's a buy at today's prices, but the point is, this is a major company. This is a company that's going to be around for a very, very long time. Talk about a moat in terms of sports gear. Nike is down that much. Apple was down quite a bit recently. Even Warren Buffett said he stopped buying. He was buying Apple last month. He stopped buying it because the price went back up again. This is the way the world works when it comes to falling prices. So this is this chart that people will see in markets. The stocks go up. Everybody's like, oh, damn, I missed out. Oh, this is I can't miss here. Oh, my gosh, what's going on? Nope, we were wrong. We were wrong. It's going back up again. And then the crash. I think we're here. I think we've just come over this mark, and we had that rebound recently where stocks rebounded in March or so, February, March, started to go back up. I think we're here. Am I going on a limb by saying that? I am. But guys, you look at every reliable long-term metric, price to sales, 10-year cyclically adjusted PE ratio, Warren Buffett's favorite, stock market GDP ratio, they all scream not only overpriced, massively overpriced. I believe, mark my words, this is May 5th, 2022. Happy Cinco de Mayo. I think stocks fall 50% from here or more. That sound ridiculous? Fine. It sounds ridiculous. But guys, this is where valuations stand right now. Valuations stand where the next 10 or 12 years has an expected negative return after dividends. So if you have a negative 2% return after dividends, that means you're going to get about a negative 3 or 4% return of prices over the next 10 or 12 years. That means 10 or 12 years from now, stocks will be about half where they are today. Sound ridiculous? Go back to 2000. Go back to 1966. Go back to 1928. Go back to every major bull market, and this is worse than even 2000. The valuation levels today are worse than 2000 in almost every metric except for cyclically adjusted PE ratio, for 10-year cyclically adjusted PE ratio. Does it sound like doom and gloom? It's not. I'm encouraging you. The world will still go on. I'm not doom and gloom. I just react to valuations. And when stocks are 50, 60, 70% lower, I'll tell you guys, now is a time to buy. And people out there will tell me, you're crazy. Stocks are dead. That's what we need to hear. A good friend of mine, somebody I trust very much, said to me, Paul, I believe the carnage will be over when people give up on Apple, because Apple's kind of like the last one that everybody believes in. Warren Buffett believes in it. Everybody believes in it. When people have given up on Apple, that's when we're close to a bottom, because that's when people will say, I didn't want to own Apple. Let's just go back to our mutual funds, our ETFs, etc. But guess what, guys? If you're living paycheck to paycheck and you're worried about all of this, this is a good wake-up call for you. Sit there and think today, can I afford to have 50% drop in stocks? If you can't, adjust. If you cannot, then just adjust. You can always save more money starting today. You can always work on being more calm starting today. You love discounts on your favorite item. Think about the favorite thing in the world to buy, whether it's go out to eat, buy clothing, whatever the thing you like to buy the most of. Stocks should be looked at the same way. If all of a sudden your favorite clothing fell in price 80%, would you buy more of it? Of course you would. Your favorite shoes fell 80%. Would you buy more of it? Of course you would. That's the way you have to look at stocks. If the stocks that make sense fall, which they will fall still, even the stocks that make sense today will still probably fall if the markets fall 50 to 70%, you should look at it as, I need to buy more. It's no coincidence that in the long term of stock markets, This is how the stock market goes. I've drawn this graph in 1,000 videos. This is the long-term value of stocks, but this is what actually happens to stock prices. It still goes up, but it goes up like this. Your job is to constantly buy along the way. You're going to overpay and you're going to underpay. And over long periods of time, you're paying this. It's too hard to time the market. It's way too hard to time the market. So your job is to buy every single month, day in and day out, and not worry about it, especially the further off you are from retirement. If you're 10, 20 years away from retirement, just keep saving, or more, just keep saving every single month. If you're close to retirement, 3, 4, 5 years, make sure you don't have too much. Make sure you do not have too much exposure to stocks, because the next 5 years, I believe, are going to be rough. Now, could I be wrong? Absolutely. I was wrong 5 years ago. I was saying the stocks are overpriced massively back then. And I was wrong. Well, I wasn't wrong, but the market showed me that I was wrong. I think stock prices will go down further than they were 5 years ago. That's just the way I view the world. I view the world based on valuations. I believe the Warren Buffett mantra that in the short run, stocks are a voting machine. In the long run, stocks are a weighing machine. What does that mean? That means that in the short run, the most popular ones that get everybody behind them, all the retail investors, your neighbor's kid next door who's 18 years old and loves Bitcoin and loves Tesla and all these things, they're going to bid up these stocks because that's a voting machine. But in the long run, people are going to care about valuations. And when people care about valuations, they care about them rather aggressively and rather quickly. Just today, we saw companies reporting that were hurting, but they reported better. They reported good results, but not good enough for the market. And they fell 15%. Why? Because the market was down today. These are buying opportunities if the companies are selling at good prices. Remember, price and value. Your job as an investor is to figure out the value of the company and look at the price. Mr. Market will tell you every day where the price is. When the price is above the value, you're not doing anything. You're not buying. You might be selling. When it's below, you're buying. The hard part is seeing the market go down, down, down while you think the value is this. That's the hard part. That's what makes investing tough. But that's what we're trying to teach on this channel. The emotional fortitude of being patient and buying even when the market says you are wrong. That's a very, very difficult thing to do. And that's why people don't beat the market. And that's why they don't even get 4 or 5% returns sometimes. And that's the reason why you need to do this. Don't try to guess what's going to happen. Just let Mr. Market do its thing. You just invest month in, month out. Don't ever look at it. Buy your low-cost index funds, SPY, VOO, or any sort of equivalent in your major brokerage. Just buy them. And you're going to wake up someday a very, very wealthy person. Don't waste your money paying a financial advisor who's going to fall to the same emotional problems you have because they have career risk. They have career risk. When markets are down, people are blaming them. So they don't ever want to be different. But they're still going to charge you a fee. Just do this. Save your 1% a year. Our retirement calculator on our software, it shows you how much that financial planner is going to cost you. Guys, it's millions of dollars in retirement. Do not hire that financial planner. What are they going to do on a day like today? They're going to tell you all the cliche things that you can get just from watching this YouTube channel. Stop watching all those hype channels where the stocks are down 70, 80, 90%. Stop watching that. Find a process that works. Process works in the long run. Berkshire Hathaway, Warren Buffett was considered dead in 1999 in terms of his abilities. Guess what? He crushed for the next 10 or 15 years. But in the last 10 years, he's done poorly. Now he's crushing again. Why? Because value matters when value matters. Value investors and good investors do best when times are bad. Don't go chasing the hype. When you chase the hype, if you don't know what's going to make you money, you have no clue what's going to lose you money. I've been there. I've been in your shoes where I was like, man, I can't miss out on this. My dad's friend's wife is making all this money in stocks. How is she doing it and I'm not? Now I've trained myself to realize that's an indication that things are too easy and there's probably a bubble going on. We are in a bubble today. We are absolutely in a bubble today. And stocks are cheaper than they were 4 months ago. And I still believe we're in bad position. And I think it's going to get uglier. And I'm not doom and gloom. I'm just realistic in that fashion. If stocks fall 60%, you're going to see me going, guys, you need to be buying stocks. And you're going to say, that's crazy. Some of you will say that. And some of you will say, some of you are watching this video now going, man, this actually makes sense. Maybe not a lot of you, but some of you are. And I encourage you to listen to this channel more. We have our community here. Somebody just messaged me in the community. We have our community here of people who just talk about our investments all day. We are there to support each other during these tough times. When times are down, from stocks are down 3, 4, 5%, and soon to be 30, 40, 50%, you need that support system. We're in this for a reason. We want stocks cheaper. This country has absorbed terrorist attacks, assassination attempts, collapses of companies. Every bad thing you can imagine in the last 100 years have happened, and where have stocks gone in the last 100 years? Up and up a ton, not even a little bit. That's the thing you have to focus on. Now you might sit there and say, well, Paul, I don't have 100 years. Got it. Go look at 30 years. What have we absorbed in the last 30 years? We've absorbed how many tragedies and how many recessions, and we had COVID. All these things have happened in the last 30 years. And guess what? Stocks are still higher, much higher today than they were 30 years ago. And my guess is, even with valuations so high today, my guess is 30 years from now, stocks will still be higher than they are today. And for those of you who have less time than that, great. Never too late to start. Go find a better process today. We have the day trading. We have the swing trading. We have the long-term trading community. We can make money in any market, up or down. That's the point of all this. I learned it the hard way. Learned from my lessons of 20 years ago. I learned those lessons the hard way. I lost tons of money the hard way. Sometimes losing the money is the best thing that ever happened to you. That was the way it was for me. That's how we learn our lessons. You have two options then. You can either shut down and stop caring, or you can start learning today. The choice is yours.